Let me introduce myself. My name is Alysya Setianingsih with NPM 2541258 from Accounting 25. Today, I will present a topic entitled Educational Economic Content in Everyday Life, the Monetary System, Understanding Inflation, Interest Rates, and Economic Stability. So, let's start in these presentations. But before we begin, I would like to ask a few simple questions. Have you ever wondered why the price of chili peppers, rice, or cooking oil suddenly increase? And why do loan interest rates at banks change over time? Why does the exchange rate between the Indonesian rupiah and the US dollar fluctuate? And why does the cost of living seem to become more expensive every year? Many people consider this issue as ordinary economic event. However, they are all closely related to a country monetary system. Through this presentation, we will learn what a monetary system is, how it works, and why it has a significant impact on our daily lives. Okay, so what is the monetary system important in our daily lives? Before discussing the definition, it is important to understand why the monetary system. Many people think that the monetary system only concerns banks, government, or economics. In reality, it affects almost every economic activity we perform every day. When the price of necessities increase, when loan interest rate change, when living costs rise, or even when we save money and make investment, all of these activities are influenced by the monetary system. Therefore, understanding the monetary system is not only important for economic students but also for the general public, as it helps us understanding the economic phenomena happening around us. So, what is a monetary system? A monetary system is a framework that regulates the amount of money circulating within an economy and helps maintaining the stability of its value. In simple terms, a monetary system can be compared to a traffic controller for money. If there is too little money circulating in the economy, economic activities may slow down because business and consumers have limited access to funds. On the other hand, if there is too much money in circulation, price may rise exponentially, leading to inflation. Therefore, the monetary system plays a circular role in maintaining balance so that economic activities can operate efficiently, sustainably, and in a stable manner. Its ultimate goal is to create a healthy economic environment that supports the well-being of society. So, who controls the monetary system? In Indonesia, the institutions responsible for managing the monetary system is Bank Indonesia, the country's central bank. Bank Indonesia has a very important responsibility, maintaining the stability of the Indonesian rupiah and controlling inflation. To achieve this objective, Bank Indonesia formulates and implements various monetary policies related to interest rates, money supply, and financial system stability. Although these decisions may seem distant from our daily lives, their impact is actually very close to us. For example, when Bank Indonesia raises interest rates, borrowing costs usually increase as well. Conversely, when interest rates decrease, consumer and business can access loans more easily. As a result, the decision made by Bank Indonesia can directly and indirectly influence economic activities throughout the country. Okay, next, how does money circulate in the economy? To understand the monetary system, we also need to understand how money circulates within the economy. The process began with Bank Indonesia, which established monetary policy. Commercial banks then distribute funds to households and business through financial products such as loans and credit facilities. These funds are used for various economic activities, including starting business, purchasing raw materials, paying employees, and fulfilling consumer needs. When consumers purchase goods and services, money continues to circulate throughout the economy, creating a continuous cycle of economic activities. The smoother the flow of money, the greater the opportunities for economic growth, investment, and job creations. So, why do prices increase? Understanding inflations? One of the most common economic phenomena we experience is the increase in the price of goods and services, known as inflations. Inflation occurs when the general price level of goods and services rises continuously over a certain period. There are several causes of inflation, including increased consumer demand, rising production costs, and higher price of raw materials, and less depreciation of the national currency. For example, when fuel prices increase, transportation costs also rise. As a result, the cost of distributing goods becomes more expensive, leading to higher prices for consumers. If inflation is not properly controlled, people's purchasing power decreases because the same amount of money can buy fewer goods and services than before. Okay, next, how does Bank Indonesia control inflation? Since inflation can negatively affect society, Bank Indonesia takes various measures to keep it under control. One of the most effective tools is the adjustment of interest rates. When inflation becomes too high, Bank Indonesia may increase its benchmark interest rates. As borrowing becomes more expensive, consumer and business tend to reduce expanding and borrowing activities. Consequently, demand for goods and services decreases, reducing pressure on prices. Through this mechanism, Bank Indonesia aims to maintain price stability and protect consumers from excessive inflation. A stable inflation rate contributes to a healthier and more sensible economics. Okay, how does the monetary system affect saving, loans, and price and everyday life? The effect of the monetary system can be seen directly in our daily lives. First, it affects savings. When interest rates increases, people are often encouraged to save more because they receive higher returns of their deposits. Second, it affects borrowing costs. Change in interest rate influence mortgage payment, vehicles loan, educational loans, and business financing. Third, it affects the price of goods and services. Higher inflation generally leads to higher living costs. Therefore, the monetary system plays a major role in shaping people's financial condition and overall economic well-being. Next, how does the monetary system affect students? Even as students, we are influenced by the monetary system in many ways. For example, inflation can increase the price of food, transportation, housing, and other daily necessities. The price of laptop, smartphone, and electronic device may also rise when the rupiah weakens against foreign currencies. In the long run, the monetary system affects national economic conditions, which influence employment opportunities and career prospects after graduations. Therefore, understanding the monetary system is relevant not only for policymakers and business professionals, but also for students preparing for their future careers. Okay, last case study. When the rupiah weakness. To better understand the impact of the monetary system, let us consider a situation where the Indonesian rupiah depreciates against the US dollar. When the rupiah weakness, imported goods become more expensive because more rupiah is required to purchase the same amount for foreign currency. As a result, the price of imported products such as smartphones, laptops, vehicle and industrial material increases. Higher import costs often lead businesses to raise their selling price, which can contribute to inflation. In situations, Bank Indonesia might implement policies to stabilize the exchange rate and reduce negative effect on the economics. Okay, last the conclusions. Based on our discussions, we can conclude that the monetary system is a vital part of the economy because it regulates the circulating of money and helps maintaining economic stability. Bank Indonesia, as the central bank, play a crucial role in controlling inflation, maintaining the value of the rupiah, and implementing monetary policies. The effect of the monetary system can be observed in many aspects of daily life, including price, saving, allowance, investment decisions, and overall living costs. Therefore, understanding the monetary system is essential for helping individuals make informed financial decisions and better understand economic development around them. So that concludes our presentation on monetary system. Through this discussion, we have learned the monetary system is not merely an economic concept studied in classrooms. Instead, it's this system that consciously influences our daily life and affects many of the financial decisions we make. We hope this presentation have provided valuable insight into the importance of the monetary system and its role in maintaining economic stability and improving social welfare. Okay, thank you for the attention. Bye bye.